Hi, today we will discuss prices move in trends. Now, although this sentence is self-explanatory, but I will explain you further so that you understand its gist of it. Because chartists believe that prices trend only up, down or sideways, or some combination of like up, then sideways, then again up. So basically you need to understand if it is trending up, there is a higher chance of it trending further up. The same goes for down. If it is trending down, then it can go further down. And if it is sideways, then the sideways like stuff can extend. So these are only the three patterns that you need to like think on. Now the standard definition of a price trend was originally developed by Charles Dow, the inventor of Dow theory. Basically, Charles Dow is the person who developed the Dow Jones Industrial Index. He developed the first best index. Now, if you look at Dow, the index, it's rising year on year. So this means that the companies in the index are rising. Now, an example of a security that has an apparent trend is like AOL. If you look at its chart from November 2001 through August 2002, that is like approximately 8 months, 8 to 9 months. So a technical analyst or trend follower recognizing this trend would look for opportunities to sell this security. Now this means that the stock was falling. So as an analyst or as a chartist, you're looking at the trend going down. So you will know that the stock is going down and you can sell and make money. So AOL consistently moves downward in price. Each time the stock rose, sellers would enter the market and sell the stock. Hence you see the zigzag movement, that is it falls let's say 7% and then rises let's say 3.5% and then again falls to 8 or 9% and then rise to 4 or 5% and then again falls. So it's a zigzag movement going down like stairs. If you put one step down, you are standing on it. But to go down, your foot, if you look at your foot, it will rise some like degree, but then again go down. So the series of lower highs and lower lows is a telltale sign of a stock in a downward trend. Basically, downward trend means that the highs keep on getting lower and the lows keep on getting lower, like stairs. You keep on going down. Your like foot or like your height keep on decreasing. So if the trend is down, you will always be going with lower highs and lower lows. In other words, each time the stock moved lower, it fell below the previous relative low price. Example, yesterday lower price was $49. Today's lower price, if the trend is down, will be $48.70. So basically it is breaking the previous low. Each time the stock moved higher, it could not reach the level of its previous relative high price. So basically if the previous high price was let's say 51 and it fell to 49, so the second high will always be lower than 51. It will be 50-50 or like 49-50. Note that the sequence of lower lows and lower highs did not begin until August in the AOL scenario that we are discussing. Before August, the sequence was always like going down. Then AOL makes a new low price that did not pierce the relative low set earlier in the month. Later in the same month, the stock makes a relative high equal to the most recent relative high. In this, a chartist technician sees strong indication that the downtrend is at least pausing and possibly ending, and would likely stop actively selling the stock at that point. Which means that as the price stopped going lower, you as a chartist will know that okay, something is changing. Let's be vigilant. Let's look at the stock once again. It's like again the example of going down the stairs. Once you reach a stable point, your height decreasing will not decrease. You will stand at a like place. So you will see that the lower lows that you were going down the stairs has stopped, and therefore the lower trend or the downward trend has stopped. This is the first indication that something has changed and you need to stop short selling the share. We will discuss this further in the next chapter. Thank you.